The saga of Saudi Arabia's challenges with oil began as a tale of triumph. Nearly a century ago, after 3 decades of arduous and bloody conquests against foes ranging from small tribes to the expansive Ottoman Empire, Abdulaziz bin Abdul Rahman al Saud secured control over most of the Arabian Peninsula. His military and political victories culminated on September 23, 1932, when he consolidated his territories into the newly formed modern Arab state, the Kingdom of Saudi Arabia. Yet, this was just the beginning of his achievements. With a newly stabilized region, Abdulaziz pursued a personal suspicion, unbacked by concrete evidence, that Arabia harbored oil reserves. Initially dismissed by oil companies as mere wishful thinking from the leader of a desolate region, his speculation soon gained credence. In 1932, the discovery of oil in neighboring Bahrain transformed his once dismissed dreams into plausible realities. On March 3, 1938, Standard Oil of California discovered oil at Saudi Arabia's Dammam No. 7 drill site. This initial success spurred further exploration, which continued to yield positive results. And before long, numerous oil wells dotted the peninsula. Eventually, it was revealed that this seemingly barren landscape housed the largest confirmed oil field in the world. This discovery was a boon for Abdulaziz. It enriched him, propelled the development of his country, and secured his rule within just a decade. From leading a modest nomadic existence, he rose to engage in diplomacy for the President of the United States. But before we continue the video, please support the channel by hitting the subscribe button, like button, comment below, and also share the video. Thanks for watching. As the decades passed, the kingdom saw uninterrupted prosperity, with leadership transitioning smoothly among Abdulaziz's sons. During these golden years, the populace saw little need to challenge the governance style that might have otherwise seemed outdated. A social contract formed, political support from the people in exchange for financial support from the monarchy. The government provided infrastructure, subsidies, housing, and more. As the 21st century began, a surge in oil prices further elevated Saudi Arabia's fortunes, with its GDP nearly tripling in just 8 years. Riyadh blossomed with luxury hotels, an influx of international visitors, and the presence of global consulting firms. The wealth seemed limitless until it, suddenly wasn't. In July 2008, crude oil peaked at $147.26 per barrel. But as the world fell into a severe financial crisis, prices plummeted to $40 a barrel within 6 months. A dramatic drop. Despite this, Saudi Arabia weathered the storm relatively unscathed due to substantial financial reserves built from years of abundance. Oil prices eventually rebounded, closing 2009 at around $80 a barrel, a level manageable for the kingdom. Then it happened again. In the summer of 2014, oil prices began a gradual decline that would ultimately reach a low of $33 a barrel by January 2016, a clear sign of a massive global oversupply. From 2016 through 2020, prices averaged around $51.20. Yet the real challenge lay in the disparity between these market prices and the break-even price for the nation's oil industry, which stood at $85.70. This didn't mean Saudi oil companies were uniformly unprofitable, but it did translate into fewer opportunities for profit, especially for wells with higher operating costs. With oil contributing nearly half of Saudi Arabia's GDP, the kingdom found itself depleting its financial reserves significantly. This economic strain led to dramatic policy shifts. On January 1, 2018, Saudi Arabia introduced a 5% value-added tax on goods and services, marking the first time the Saudi public was directly solicited to support government finances. This change underscored the vulnerabilities of an economy deeply reliant on oil. Experts have long debated when peak oil, the point at which oil production maxes out before declining, will occur. Despite inaccurate predictions in the past, more recent data suggests this event may be approaching. From 2018 to 2019, there was a slight decrease in oil production, a decline not attributed to external crises like those in 2002 and 2009, but to market dynamics alone. Then, the pandemic in 2020 led to the sharpest year-on-year production drop in recent history, possibly signaling enduring structural changes such as reduced commuting due to more people working from home. This has raised legitimate questions about the future recovery and growth of oil production. Shell, one of the largest global oil producers, has even suggested that its production peak occurred in 2019. Despite these challenges, Saudi Arabia's position atop some of the world's most accessible oil fields with relatively low production costs provides a buffer. However, the future of an oil-dependent economy appears increasingly precarious. The trend of crude oil prices since 1983 further illustrates this point. Amidst these economic challenges, a significant royal succession unfolded. In 2015, following the death of his half-brother, King Salman took the throne at age 79, deciding that he would be the last of his generation to rule. Mohammed bin Nayef was initially named Crown Prince, with Mohammed bin Salman as deputy. However, in a dramatic turn of events, on June 20th, Mohammed bin Nayef was coerced into relinquishing his claim, positioning Mohammed bin Salman as the heir apparent. Since then, Mohammed bin Salman has consolidated significant power and become the de facto ruler of Saudi Arabia. Recognizing the critical state of the oil-dependent economy, the McKinsey Global Institute issued a stark forecast in late 2015. Without major changes, they projected a decline in average monthly household income from $3,800 to $3,000 by 2030, a doubling of the unemployment rate to 22%, and a fiscal swing from $900 billion in government assets to $2 trillion in debt. Thus, Saudi Arabia faced the prospect of a severe economic downturn, underscoring the urgent need for a diversified economic strategy. This analysis captured significant attention, particularly from Mohammed bin Salman, MBS, marking his initial major step towards becoming the de facto ruler. MBS embraced Saudi Arabia's most formidable challenge, bolstering his image as a reformer through the introduction of Vision 2030. His ambitious plan aimed to transform Saudi Arabia into a sustainable nation by focusing on three main goals: enhancing governance, revitalizing the economy, and improving societal conditions. The first goal, governance, covered a wide range of reforms from reducing corruption and cutting bureaucracy to digitizing government services. One of the most striking actions under this initiative occurred shortly after MBS was appointed Crown Prince. Around 500 government officials, business leaders, and royal family members were detained at the Ritz-Carlton Hotel in Riyadh on corruption charges. The legitimacy of this sweep remains debatable, yet it resulted in the government reclaiming assets worth approximately $170 billion through settlements. The economic pillar included a variety of strategies, such as privatizing some government services, encouraging women's participation in the workforce, attracting foreign investment, boosting government revenue, and expanding the private sector. Additionally, aiming to diversify the economy similar to the UAE, Saudi Arabia started welcoming foreign tourists, a significant shift from its traditional policy that restricted visits to religious pilgrims. On the societal front, Saudi Arabia sought to reform its conservative cultural norms. The kingdom reversed a 30-year ban on cinemas by partnering with AMC to open numerous movie theaters, hosted the region's largest music festival featuring international artists, It established the region's largest music festival with artists like David Guetta, Steve Aoki, and Tiesto, and planned a Six Flags theme park. In a landmark change, the government allowed women more freedoms, including driving and traveling without a guardian's consent. These moves appeared to signal a shift towards a more open society akin to its neighbors like Bahrain, Qatar, and the UAE. However, the surface-level changes masked deeper issues. The assassination of journalist Jamal Khashoggi on October 2018 revealed the continuing suppression of dissent and raised global awareness of Saudi Arabia's human rights record. This incident, coupled with other controversial actions like the alleged war crimes in Yemen and the hacking of Jeff Bezos' phone, undermined the country's attempts to reform its image. However, even worse for them, it showed the world that the Saudis had not changed. The consequences of these actions were significant. International artists and corporations faced backlash for their associations with Saudi Arabia. For example, both AMC and the Grand Prix faced criticisms for doing business with Saudi Arabia amidst their ethical concerns. These reputational issues suggest that despite legal and social reforms, substantial challenges remain for Vision's 2030's ultimate success. No company or artist whose success depends on likability from the public wants to deal with these PR nightmares. Now, when David Guetta holds a concert in Saudi Arabia, he's met with a flurry of critical articles. Similarly, when Formula One schedules its Saudi Arabia Grand Prix, it faces memes comparing it to hosting races in Pyongyang or Kabul. AMC's continued expansion into Saudi Arabia results in reputational risks, especially when competitors withdraw citing ethical concerns. This affects business decisions. Given similar profit opportunities, companies often prefer investing in the UAE, which, despite its own human rights issues, has cultivated a more favorable image in the West. These dynamics underscore that Vision 23 remains largely aspirational. While the pandemic, low oil prices, and early stages of reform efforts explain some of these challenges, there is scant evidence of deviation from a failing trajectory. The government is heavily investing in ambitious mega projects like a $500 billion smart city and a $3 billion entertainment district near Riyadh. However, similar projects in the UAE, such as the Burj Khalifa and the Palm Islands, were not the primary drivers of its economic diversification. Rather, it was the less glamorous work of creating a business-friendly environment that attracted sustainable global cooperation. Businesses are interested in accessing Saudi Arabia's large, untapped market, but the current risks, stemming from its absolute monarchy, terrible LGBTQ laws, human rights issues, gender disparities in the workplace, and a legal system based on a strict interpretation of Sharia law, making it a precarious investment environment. Despite its wealth, Saudi Arabia's approach to stimulating private sector growth and attracting international investment lacks a clear, effective vision for organic economic transformation. So far, reforms have been superficial, and decision-makers around the world remain unconvinced. If Saudi Arabia truly wants to secure its place in the global landscape by 2030, it will need to embrace the deep, systemic, and radical changes that its leaders have so far been reluctant to undertake. It's clear if the Saudis don't diversify, they will fail. So what do you think lies ahead for Saudi Arabia? Will they be able to make the changes necessary to integrate into Western society? Also, I'm curious about your personal experience with Saudi Arabia. Have any of you ever been to the country personally? If yes, what were your thoughts? Please share your thoughts and experiences in the comments, and again, please support the channel by hitting the subscribe button, like button, comment below, and also share the video. Thanks for watching.